Did you know that most of today's millionaires made their own fortune? In fact, about 88% of them didn't inherit their wealth, but build it from scratch. In this video, we'll not only chat about how to start growing your money, but also dive in real hands-on investing steps. The practical side, which I enjoy most. Having a lot of money is one thing, but keeping and multiplying it requires some solid money smarts. And if you want a shortcut to building wealth, you need to know a thing or two about investing. So where can we get some top-notch advice? From the experts, of course. One name that often pops up is Warren Buffett. This guy knows his stuff. He's a powerhouse in the investing world, and some of his insights are like gold for those looking to make smart money moves. Let's jump into what he has to share. Before we dive into Buffett's teachings, a quick introduction. I'm a seasoned financial advisor, and my job revolves around the world of investing. Over my career, I've guided more than 5,200 individuals on their investing journey. Through my lens, some of Buffett's insights are invaluable, regardless of whether you're just starting out or you've been in the game for years. Believe me, if you put these tips into action, you could be looking at a hefty return on your investments over the next couple of decades. So grab a notepad and get ready, because the wisdom I'm about to share could significantly boost your bank balance. Now, anyone who's watched the stock market knows the price can be volatile. News and global events can cause dramatic swings. During such turbulent times, some investors just freeze, waiting for the perfect moment to make their move. This approach, called timing the market, might work occasionally, but more often than not, it results in missed opportunities or even losses. But don't fret, there's a proven strategy that can help. It's called dollar cost averaging, or DCA for short. Even Warren Buffett, the head of Berkshire Hathaway, a giant with over $1 trillion in assets, stands by this method. Here's the crux of DCA. You invest a consistent amount of money at regular intervals. Rain or shine, regardless of market highs or lows, it is simply a disciplined approach that can help navigate the wild swings of a market. For majority of investors who don't want to spend time actively managing their portfolio, combination of dollar cost average rule and investing into popular stock funds or so-called ETFs is what Buffett highly suggests to think about. According to Warren Buffett, regular investing into funds that track such indexes like S&P 500 is calm and almost guaranteed way to make money. The chance that majority of those humongous index companies which are tracked by ETF will go bankrupt at once is equal to almost absolute zero. Stock funds that track major indexes are also pretty hard to beat by ordinary investors. At the end of the day, you're investing in top 500 businesses in America altogether, and it recycles every 3 months, so you end up focusing only on the top businesses in the world. Therefore, this relatively profitable, safe option that requires very little time and management skills is what Warren and his so-called right hand, investor Charlie Munger, recommend for most people. Now that we got the theory down, it's time for some action. If you're considering investing into S&P 500 ETF we talked about, you'll first need to pick a stockbroker and set up a trading account. A dependable choice here is Freedom24, which I personally use for my own investments. It's got a great range of investment options, and by signing up through the link below, you'll get some cool bonuses for a kickstart, like a free share up to $600. If you're keen on diving into S&P 500, Freedom24 has many ETFs that focus just on that. A prime example is Vanguard S&P 500 ETF with the ticker symbol VUAA. I put my money there because it's affordable, has a low management fee, and boosts a hefty number of assets under management. For those of you looking to invest in euros, there's also iShares S&P 500 ETF with the symbol SXR8. I've added details and relevant documents for these in the description in case you want to dig deeper. Let's jump into some practical demo from Freedom24, where I invest in S&P 500, couple hundred euros, and it's been recorded on one of my seminars. So I'll just insert it here so you can see how easy it is to actually invest. All right, welcome back to the practical session where we invest in S&P 500 through ETFs, through Freedom24 brokerage. So let's jump straight to the screen, and I've already have on a screen open Freedom24 account. This is one of my accounts. I have different investments in here already live, but I wanted to show you like easy way to invest in euros or dollars in S&P 500. So we already picked the Just ETF website. We already understood what iShares Core S&P 500 or Vanguard S&P 500 means. And in this practical session, you initially can follow exactly the same with any indices. But as we already find out what the ticker symbol is, we normally just go to our broker account. We top it up, literally press add money, and majority of the times you can either top it up by debit card or credit card or bank transfer. Initially, most of the times it's free to top it up by debit card for the first 30 days, like with Freedom 24, but then after that it's 2.5%, which is quite expensive in my mind. So I normally choose to top it up by bank transfer, and that's normally on your bank side's expense. So as example, this can cost zero. Broker doesn't get any money for that. So in my end, I always top it up by bank transfer and then wait for like 3-4 days until the bank transfer goes through. And then once your money is already in your account, you simply go and enter the ticker symbol. So VUAA for dollars, or as we know it, SXR8 for euros. So if I pick euros as an example, you can see that this opened up straight away. And if I scroll it down, I see the ISIN number, I see that it's an ETF, and I see that it's in euros. If I go on dollars, straight away, different ISIN, still an ETF, and it's now telling me it's dollars. Considering I don't have dollars in my account at the moment, or the sum is lower than the 84, this is telling me that I'm not able to buy it unless I exchange my money or use margin. Now I don't want to use margin as example. So I click SXR8, and a couple things I need to check. First of all, market price. This tells me that I'm telling the system that I'm gonna buy at the price whatever it is in the market. So at the moment it's 439, and this is fine for me. Like if it's plus 10 cent, minus 10 cent, doesn't matter. Usually it goes through exactly at the same time if the market is open. If it isn't open, then it's normally gonna go through as the market opens, and you can see these times to get that information. Now I can also, if I like that, I can also choose to put the price in. So for example, I could say I only want to buy one piece for 435. So if the price drops to 435, that will go through. If it doesn't drop, then the order will just be hold there, and that 435 will be reserved for that order until I cancel it. Now again, for the canceling, I can go order settings and I can choose until end of day. So if I set the price 435 and say until the end of the day, if the price doesn't get to 435 until end of the day, the order will simply be canceled. Or I can choose until canceled and then until I go and do it myself. So if it's in a week, in 5 weeks, in 2 months, in a year, this will be sort of left here until that price reaches it. So I normally just click until canceled, make sure that I don't have any stoppages, margins, or one-click trades. These can be left alone. And then I simply leave this blank to leave it for the market price. Volume is literally if you want 1 unit, 2 units, 3 units, 5 units, and literally this is gonna cost me around 439 euros. So if I click place order and confirm, this would go through nearly immediately because the hours are open right now. So yeah, that's how you become a shareholder. This is as simple as it is. So let's get back to the course. For many, this info is enough to get started. Just follow the link to set up your account. Although I'm showcasing Freedom 24 because I use it, the concepts apply to most brokers. ETFs make up a good chunk of my portfolio and I've been pleased with the results. But let's dive a bit deeper. Yes, Buffett swears by the dollar cost average approach and index funds for the average investor, because they offer steady growth with controlled risk. But his personal wealth? Well, that's a different story. Buffett is known as a value investor, hunting for undervalued stocks that others overlook. He often describes his approach as buying a dollar worth for 50 cents. And it's evident his strategy pays off. Investors who trust him often see returns that double what S&P 500 index funds offer. So many of you might be wondering, how does Warren Buffett identify those golden opportunities in the stock market? Today I'm going to break down some of his key strategies without drowning you in terminology. Buffett follows a method sometimes called the Buffett-Munger approach. Here's a quick breakdown. First of all, understand the business. Before investing, Buffett ensures he gets the core of the business. What do they do? How do they earn? What's the future looking like for their business model? If you can answer these questions, hold off on investing. Second one, durable competitive advantage. This is a big one. Buffett looks for companies that stand out. Maybe they got a unique product or a world-renowned brand. The idea is that their edge is so strong that competitors can't easily topple them. Third one, talented and honest management. A great company also needs great leaders. It's not just about reading resumes, but also seeing if their past visions matched their outcomes. Did they follow through on their promises or did they falter somewhere? Next one, margin of safety. As Munger puts it, even the most fantastic stock has a ceiling on its value. So the trick is to find undervalued stars. Companies performing brilliantly but aren't the talk of the town yet. With that said, wouldn't you like to know where Buffett is placing his bets? Or Charlie Munger is placing his bets? Let's dive in. The cool thing is you can track this information for free and without any hassle. Let me show you how. Alright, now you should be able to see the screen right now, and just to confirm, this is live, like I haven't logged in or anything, and it's completely free. And initially it updates on its own, so you don't have to worry too much. You get the updates from the super investors and a lot of other information like most owned stocks, top 10 stocks to buy, and so on and so on. But we want to find out what Warren Buffett is buying, and we're looking for Berkshire Hathaway. For those who are interested into Munger example, so Daily Journal Corp or the last one here. So let's check the Warren Buffett's as an example and simply click on the button and you can see the current holdings. So everything what he currently holds, over 348 billion in sort of net value, like portfolio value, and it's 48 positions. So again, this is Q2 of 2023. This will be updated as you open it up, and you can also see the activity. So you can either go by like full portfolio and look at the sectors and all the data and all the information, or you can simply go on activity and see what happened in the last quarter. So in Q2, you can see that he added some to already existing positions, bought some completely new positions, reduced certain positions, or closed some positions. And if you click on any of these stocks, you'll get more information just to see who else is owning it. So a lot of good information on this page, and you can see what super investors are doing. So yeah, let's get back to the video. Now, I wouldn't recommend to just copy paste the Buffett's or Munger's or any other super investor examples, but here's where you can find some interesting business to look at. Here's the reality of investing. There are always risk involved. Prices in the stock market are like seesaw. They go up and down. And even the best stocks can see a dip, especially during tough economic times. The golden rule: don't panic sell a healthy investment just because its price drops momentarily. Take 2022 for instance. We all felt the sting of high inflation, which continued into 2023. In the European Union, inflation hit a whopping 12% by end of 2022, way above the ideal 3-4%. It wasn't just numbers on a chart. We saw it in rising food prices, energy bills, and daily expenses. This made a lot of people wary of investing. But if you were to ask Warren Buffett about investing during high inflation, he would likely remind you of his well-known advice: be greedy when others are fearful, be fearful when others are greedy. Crises in his eyes can present opportunities to grab fantastic stocks at the bargain prices. Buffett often brings up economist John Keynes when discussing inflation. Keynes called inflation a silent tax that few truly grasp. Buffett believes that to safeguard against inflation, boosting your earning power is a key. That could mean leveling up in your job, acquiring new skills, or launching a business that offers essential products or services. As for passive investments during inflation, Buffett champions investing in robust businesses. Think of companies that say produce food. Even if the economy wobbles, such businesses can often weather the storm just because they're in need. How do you spot a good business? Buffett suggests looking for ones that can raise prices without losing customers, even if there's excess capacity or stagnant demand. Lastly, Buffett points out that in inflationary times, scalable businesses can shine. In simple terms, these are companies that can expand their operations without heavy investments, setting them up to thrive during economic challenges. Let's simplify scalability with an example. Think about Meta, formerly known as Facebook, and compare it to airplane maker Boeing. For Meta, showing a few extra ads on their platform is easy and sort of low cost. It's a quick action and they can scale up without huge expenses. We won't dive into how effective this might be, but focus on how flexible it is, so they can make that decision quite easily. On the flip side, if Boeing wants to produce just, let's say, 10-15% more planes, it would be a massive task with a huge project. They'd spend much more money and time to make it happen just to increase the productions for the required results. In time of crisis, you can often find solid companies at discounted prices. It's an opportunity to invest wisely, but always do your homework and make sure your investment stays strong even in rough waters. Don't forget, using the lessons from Warren Buffett can guide you to success in the stock market. And for those curious about ETF investing, check out my special course. Right now you can get it for a huge 90% off with the code FREEDOM24. The link is down below. If you found this video helpful, give it a like, hit subscribe. It's a free way to support the channel. Drop a comment on what you would like to learn next. I'll always appreciate hearing from you. Until the next video, take care and see you soon.